Mixed day of trade in the grain markets with an increase in the influence of some of the outside markets. Crude oil, for example, traded higher to give the commodity world a general boost. The livestock markets were mixed, but mostly lower, while cotton futures saw some long overdue short covering to lift prices.
Live from 2 Tuesday via Farm Journal Studios, this is AgriTalk. This afternoon, we'll chat with Sam Hudson from Cornbelt Marketing. Directly following the news, Brian Splitt from agmarket.net. I'm handsome newsman Davis Michelson. Now, say hello to the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much. Welcome to AgriTalk, everyone. I am Chip. That is Davis.
Hello.
And a bit of a recovery in the corn and soybean markets today.
Yeah,
that was
like
nice to see. Yeah.
Mm-hmm. Mm-hmm.
Yeah.
Well, I mean, it can't go down forever, right? Can't go down forever.
I don't know if we can say that or not.
I'm saying it.
We used to think that the downside risk in the market was to zero until crude oil proved us wrong during the pandemic. And traded negative.
Did it go clear to negative? It wasn't like just a little negative either. Wasn't it like negative $45 or something like that? It was insane.
37 is in my head. Negative 30, okay. But it could have been 45. I'm
split
not
the
sure.
difference and call it 40. We'll call it 40.
Yeah, there you go. So, yeah, it did show us that the market can actually trade negative. But no, I don't think we're in that kind of shape at all here. The market's just spending a lot of time trying to figure out exactly what the next step is. I would say that there's some confusion, some uncertainty over the Brazilian tax issues. Jack Scoville, Price Futures, has been talking about that. We're going to talk about it a little bit more with Sam Hudson from Cornbelt Marketing today. Yesterday, we busted through some levels of support in corn, in soybeans, in wheat. Today, just a bit of an upside recovery, or did we restart a rally? We'll talk to Brian Splitt from agmarket.net about that here in just a couple of moments.
Great.
All right. You ready? Let's get started.
I think I'm ready. USDA says 27% of the U.S. winter wheat crop was harvested as of June 16. Chip, that's 13 points ahead of the 5-year average pace. The quick harvest ramped up harvest hedge pressure on wheat futures yesterday, and follow-through selling weighed on the market again today. July soft red winter wheat futures led the drop in wheat. Front month SRW posted a high range open and closed near session lows and at the lowest since April 19. Wheat bears are targeting support at the April 18 low of 550. Spring wheat crop condition ratings of 76% good to excellent as of June 16 were up 4 points from the previous week. July HRW wheat futures today 4 3/4 cents lower at $6.75. July SRW wheat down 9.5 cents to $5.82. July spring wheat closed at $6.32 3/4, down 5 3/4 cents. Chip.
All right, okay, here we go. The spring wheat condition report. 76% good to excellent, just 4% poor to very poor.
Oh, wow.
So not a lot of stress in that spring wheat crop.
Yep. Well, December corn futures got back most of what was lost yesterday and posted an inside trading day with a low range open and a high range close. Slight deterioration of the U.S. corn crop gets some of the credit for today's short covering. USDA rates 72% of the crop in good to excellent condition, down 2 points from the previous week. Traders also pointed to good demand for U.S. corn in the export and ethanol markets. The weather forecast is a mixed bag with some stress potentially developing in the eastern corn belt. July corn futures today 6 1/4 cents higher, $4.50. September corn up 5 3/4 cents to $4.55 3/4. December corn futures closed at $4.67 3/4, up 4 3/4 cents. Chip, $4.50.
I don't know what I'm missing.
Huh?
Yeah, I don't know what I'm missing on these corn crop conditions. Okay. Because I drove through southern Minnesota, and now Minnesota has got 0% rated very poor and just 3% rated poor. And that's one of the holiest crops I've seen in a long time. There are drowned out spots and yellow corn everywhere. I don't know what I'm missing.
Well, USDA says 70% of the U.S. bean crop is in good to excellent condition, and that's down 2 points from the previous week. But that did very little to support new crop bean prices. Old crop beans found more support from uncertainty about Brazil's export tax scheme and from reports that lawmakers are urging EPA to increase bio-based diesel mandates for 2026. November soybean futures opened slightly lower and spiked support at yesterday's low. Prices rallied to moderately higher levels, then fell back to post a low-range close, but above the opening range. July beans 16 and 1/4 cents higher, all told 11.74. August beans up a dime, 11.56. November beans closed at 11.32. That's up 1 3/4 cents, Chip.
5% of the bean crop is rated poor to very poor. That is up just 1 point from the previous week.
December cotton today was 99 points higher at 72.76. Those condition ratings for the cotton are pretty decent this year too, aren't they?
Yeah, I do believe so. The planting progress is looking good.
Yeah.
And then the cotton conditions were coming in at 54%.
Mm-hmm.
54% good to excellent.
Okay. Well, live cattle futures inched to the downside again today, even with the boxed beef market higher on strong morning movement. Traders generally expect the cash market to ease from last week's all-time high. August live cattle today were 70 cents lower at 182.10. August feeder futures off $1.37 and 1/2 to 259.95. In July, lean hogs today $1.60 lower at 93.77 and 1/2. The October contract actually up 17.5 cents to 78.40. Chip.
All right. Thank you very much, Davis. Let's bring in Brian Splitt, agmarket.net. How you doing, Brian? Take that mute off there, buddy.
No, that was me.
There
That was my mute.
Oh,
that was Big Apple Joe with the mute. Sorry, Brian. How you doing, man?
Can you hear me now? Did Joe fix it?
I can
All
hear
right.
you now. What do you make of what's going on in this corn trade?
We went down and hit some support coming out of the weekend, and I think there's been a lot of talk about a potential head and shoulder top forming in D's corn. If you're looking for some symmetry in the pattern, based on the scope of the left shoulder, I think we've got another shot of going up to 480 one more time. We made two highs on the left shoulder. One was the quarterly stock and planning intentions report, and then there was another peak at 480 about a week before that. So I think things are lined up with the crop conditions next week. I got to think that with the heat that we're going to see, especially in the eastern belt, that we're going to see conditions deteriorate further. Yeah. I think we probably could bounce into those condition ratings and then maybe meander up around that area as we get into the quarterly stocks and planning intentions. But I think that report's going to drop the hammer on corn. And in my opinion, we're going to have corn trade in the month of July, a lot like how wheat traded in the month of June thus far.
Wow. Okay. We've got the quarterly grain stocks report coming up, the acreage report coming up. We got to keep that on the radar screen too, don't we?
We do. There was a lot of surprise on the March planting intentions because there were acres that just didn't show up on that report. Mm-hmm. So I think a lot of people are wondering if acres are all of a sudden going to show up on this report. And if we see that corn number, north of 90 in a material way, I think that's going to have a heavy weight on the market, especially if some of the short-term weather that we're concerned about right now doesn't pan into something as far as a major, bigger picture concern.
Right. Yep. It is hot out there. There's no question about it. It will be interesting to see how the market or how the crop handles that going forward. Brian, thanks, man. Appreciate you.
Yeah, appreciate you guys.
All right. Brian Splitt, agmarket.net. We're going to talk more about crop conditions. We've got to talk about money flow. What are the funds doing? Sam Hudson, Cornbelt Marketing, next.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind. Shout out to the
Welcome
good doctor.
back. What was that?
Shout out to the good doctor, Professor Tim Smith.
Oh, yeah? What do you got going there?
He loves Rammstein, is the thing.
Oh.
Yeah, he loves it. He's so fired up right now, I can feel it. Yeah, good stuff. Stay safe out there, doctor.
Glad that we can do that. All right. Welcome back to AgriTalk. I'm Chip. That is Davis.
Indeed.
Just got this from Aaron in Southwest Iowa. Got this by
Aaron.
email.
All right.
Yep. Host at agritalk.com is where he sent it. Southwest Iowa corn is also very holy.
Aha. Amen.
planted into very poor conditions. Any chance that much of the 7% that is not emerged is actually drowned out and never will? That's a possibility.
Good question.
I'm not exactly sure what the rules are on that, Aaron. And I know what you're saying. So if you're looking at a 40-acre field and 4 acres isn't emerged by your best estimate, do you call it 90% emerged for that field? Or is it that you drive by 10 cornfields, 9 of them have emerged and 1 of them hasn't, and you call it 90% emerged? I'm not exactly sure how the crop enumerators handle that.
Yeah, that's a great question.
We're going to have to dig into that. I will drop a note over to Lance and see what he comes up with over at NAS.
Let's shake the tree for Aaron. What do you say?
We might as well. Yeah, let's do that.
Let's do it.
All right. Good question, Aaron. Let's get to Sam Hudson, Cornbelt Marketing. He is our guest analyst today. Sam, welcome back, my friend. How are you?
Hot. It's hot.
Yeah.
Man.
Dang, man.
The fire hydrants are fighting over dogs over here. Crazy.
Have you ever seen such a thing?
Gold star, Sam.
Can you imagine being a corn plant? I mean, the humanity in this is, shut it down.
Shut it down. Let's see, what do we got? Here we've got a feels like. I don't even see the feels like. They don't even want to show me the feels like on the weather, but it's 86 degrees here in Northeast Iowa right now, and humid as heck.
It's actually a little bit better today than it was yesterday. Yesterday was even worse, but we're looking at these conditions, at least around here for another week. And I think that's something, Brian mentioned, maybe some condition concerns in the central and eastern Corn Belt will we stay dry, probably limited to some of the later planted stuff. But I think you got equal concern, and you touched on it up in southern Minnesota, parts of Wisconsin, northwest Iowa, the eastern Dakotas, even northeast Nebraska, where they've been inundated with a lot of water, and there's some more on the way.
Yeah, there's some of the pictures from Minnesota where they've had way too much rain. I mean, full quarter sections flooded, standing water up, halfway up the fence posts in some of those fields. It's absolutely, can't see any corn. They say there's corn planted in it, and you can't see any corn because it's all underwater. That is tough.
And take note of that, because I think that's exactly what leads to kind of a longer term thing playing out here with harvested acres, as opposed to just losing acres in general on this next report.
Yep, that's great point. How much is that contributing to the day-to-day vibrations in the market? I mean, yesterday we started the week lower and had the nice comeback in corn and soybeans today. It is crop conditions. Is that part of the reason why?
I don't really think so. I mean, I think it's an easy scapegoat. I feel like if it was a good reason why, we wouldn't have been down so hard yesterday, because everyone was expecting it to be lower, So, I really think that these European wheat values, stalling into a wall here. The fact that we got to take these July contracts off the board, and there's plenty sitting around, I think just kind of keeps the market suppressed. And so we got another couple of weeks of that to work through. 10 days from now, we'll get a kind of a resetting of the table here. And, you got to note the demand's been good enough here that, we shouldn't expect any, big concerns there moving forward. And I think it opens the door here of figuring out, if this quarterly data, be it acres or be it stocks or a combination of both, if there's a chance of getting our corn carryout back under the 2 billion mark, just from a psychological level as we go into midsummer.
Yeah. What kind of a yield do you think that the corn market has got factored in right now?
I would say 177 to 175 is probably going to catch most of the expectations. I think it's easy to write it down to 177, similar to last year, just kind of out of the gate. But again, again, it conjures up an avenue where, what if we bump demand 50 to 100 million because we continue these counter seasonal exports and ethanol remains good and the feed usage remains good, and then all of a sudden you write yield down 5 or 6 bushel. It's a tenable situation to keep at least an artificial floor under the market, but we're just not running out of any of it today, and we got to get rid of these off-farm stocks here first too.
Yeah. are you seeing any kind of an indication from the cash market that those on-farm stocks are starting to loosen up and move a little bit?
I think you're on the front end of that now. When we saw the rally, this initial kind of bounce happen, we saw, initial rally there at the beginning of May, just as things were starting to get wet. Obviously, no one's really concerned about, getting stuff delivered there. I think commercials had, a bit of coverage going into that time frame. But, after this last drop, I think is probably the most evident. We saw a drop in December corn, and I guess we should really be talking about the July. The July got down into the, upper 430s, I believe, and then bounced all the way back to 460 on that little move there. Basis really appreciated on the move down. And if you think about it, spring is really stretched out here. You got planters that are literally still in the field, people going into side dressing, spraying, I mean, you name it. And trucking just wasn't at the top of the priority list, especially when cash prices, moderate and come down. Everyone's more interested in hauling on contract at their good prices than, continuing to sit out here and commit to more. And so at this point, I think the concern becomes who's going to get caught holding the bag here. Flat price still isn't performing all that well right now, and I just think you got nowhere to go.
Why would you wait? I mean, I'm seriously, why would you wait?
Well, I don't know. I mean, that's the ultimate question, isn't it? I mean, especially from an interest rate standpoint, front end basis standpoint. I mean, it's been a Hertz donut if you're still making these decisions. It's the tough ones to make, but keep in mind we're head based at in an elevator, and so we see both sides of that. People we advise, people we don't, but have a pretty good handle on the general population and how that's positioned.
Yeah, and if you have decided to keep corn in the bin, that's one thing. If you've got a reason for it, maybe you got a feed lot or a feed mill close to you, and you just know that at some point this summer that base they're going to come calling, and it's going to get you a basis push, and it's going to pay for keeping that grain in storage. If you know that about your marketing situation, great, good for you. That's awesome. But if you're just selling into a generic market, I'm not exactly sure why you hold on to it and don't transfer risk to paper. If you want some upside exposure, move it over to paper at this point, don't you?
Yeah, that's what I would think. I think you're going to be dealing with this overhang, really into the August timeframe. And, we talked about 175, 177. Even if we propose, that you can argue sub 175, when is that going to take place? USDA is not touching a yield until September at the earliest, maybe even after that. And so we just got so many things to get through. We've just seen wheat fall more than $1 off the highs. And so there's just not a whole heck of a lot to be excited about. But in that void, I believe those, the spreads, the basis. I mean, if you look at it, when we had that rally, the basis was the first thing to go. The spread cracked back and then went the market. And so I would expect the same thing here on the way back up once we flush this July off.
Well, how much of an influence has wheat had on corn? It just, yesterday when wheat was sharply lower, it felt like corn got drugged to the downside. And if it wouldn't have been for that big sell-off in wheat, to me, it felt like corn had a chance of trading higher in front of the crop condition update that we got from USDA. So there's got to be some influence there, isn't there?
There's some. It's not a ton, though, because keep in mind, I mean, it did the same thing on the way up. We rallied, $1 or more on the way up, and corn rallied, 25, 30 cents or something from, or maybe 35 cents, 40 cents from low to high. And so we get the same effect on the way back down. But the sentiment in general, just the world grain values, that's what gives the funds a little bit more confidence in holding on to short positions, especially when they know the producers are long and all the headlines are stacking up, neutral to negative, and you still have the supply buffers in place.
All right. Yeah, but it was more fun when wheat was rallying and pulling corn to the upside. See?
It sure was. Yeah, that story's not over. I mean, we could still see some export restrictions, but if that's to happen, I don't think it's going to happen until late July or even into August.
Right. And as of right now, just the hedging that's coming into this wheat market is really something, isn't it?
Yeah, but harvest is starting about 2 weeks early, it seems like, around here. It's crazy.
Yeah. Man, that went super fast. Okay. We are in the middle of a conversation with Sam Hudson, Cornbelt Marketing. We've got a lot of ground that I want to cover yet, including the influence of some of the outside markets. Crude oil trading over $80 a barrel. What kind of an impact is that having on the soy complex. We'll find out what Sam thinks next here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 4 3/4 cents lower at $6.75. July SRW wheat down 9 1/2 cents to $5.82. July corn futures were 6 1/4 cents higher at $4.50 even. December corn futures closed at $4.67 3/4. That's up 4 3/4 cents today. July soybean futures were 16 1/4 cents higher at $11.74. November beans closed at $11.32. That's up 1 3/4 cents. December cotton today 99 points higher, $72.76. On your livestocks, August fats today 70 cents lower, $182.10. August feeders down $1.37 1/2 to $259.95. And June lean hog futures today $1.60 lower at $93.77 1/2. Get more market news every market day. Visit tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views
This Tuesday afternoon, we are having a conversation with Sam Hudson from Cornbelt Marketing. Like I said at the end of the last segment, Sam, let's jump right into this, the influence of some of the outside commodity markets. What kind of influence does an $80 crude market have on the commodity world?
Well, we're always dealing with the glass ceiling for ethanol, right? We can only grind so much. I think it just offers stability at the end of the day. I don't think we should expect any major concerns about cutting demand in these subsequent reports, both, domestic usage and the export side. Again, we're seeing some pretty strong counter-seasonal exports. Wouldn't be surprised to actually start dialing that number back up as we get closer to the next marketing year. So I think that's the most we can, boast about it right now. There's just so much coming down the pipe ship with, the biofuel policy and just guidance in general. And unfortunately, we've touched on this in the past. I just don't know if we're going to get a whole lot of clarity on that until we get through these elections.
Yeah. Okay. Okay. What kind of an influence, let me ask this just a little bit of a different way. What kind of an influence does a strong energy market have on funds and their willingness to invest in commodities? In other words, is there the potential for another inflation play?
Absolutely. I don't know if it's right away. I think the short-term play for energies in particular, I think is maybe geopolitically based, because you're going to see this played so much about how we've drained the SPR and how inflation in general has been weight around our neck. That's not changing, but keep in mind the Fed's stance on everything. They're not going to let this thing run away. They're going to do everything they can to keep a leash on it. Where we're going to be at in another 2 years, I cannot even tell you. And so one aspect of it, though, is our exports. We talk about ethanol domestic production and how that's provided stability. That's not even been the brightest part of it. I think it's really been our export market. The fact that we're finding more outlets for it, the fact that the world's interested in that, I think has been a huge benefit amidst all this uncertainty that we're going to have here in the next 3 to 5 years.
Okay. You've mentioned corn demand a couple of times now. I want to talk a little bit more about it. Let's just, in our imaginary supply and demand tables, hold the supply side steady. Is the demand side of the balance sheet enough to get corn carryover under 2 billion bushels?
I think it's possible, but not much. I think it would be enough on its own to maybe get it there. I think you could press that up 100 million, but it's going to take some time. And by the time we see that, we're probably going to be, focusing more on, what harvest yields are. I think this is more of a kind of a September issue. I don't think we're going to get this, just all at once. It's going to be 25 at a time, something like that. So, again, it offers stability, but it doesn't offer such a strong throttle that we can really change things in a big way. And, but again, counter-seasonal exports is one of those factors that we had to see alongside continued yield threats, and we got both of them cooking right now.
Yeah. So if we can maintain the demand pace or base, whichever, for corn exports and for corn for ethanol, and actually see the supply side of the balance sheet pulled down to that 177 to 175, for a national average corn yield, we're under 2 billion bushels.
Sure. Yep.
Okay.
And I think that's what could, help base the market as you get it closer to the 450 December mark. I'm not saying you can't trade below there. I really think you could take July still down to the 430 mark, but it might be the last day we can, trade the longs in that market. And so it all comes down to timing. I just think if that happens, the producer is going to be pretty slow to commit to selling corn under 450 until they know what they've got. Because when you talk about, yields being 10 to 15% lower and 425 cash, no one's going to commit to that. It's just not going to happen.
Okay.
I think that's how you tighten spreads. Keep an eye on that Dece July spread for next year in that regard, because I think you can tighten that up. I think you can see some really strong basis opportunities as we seasonally do as you get in that November timeframe. If this all plays out, we think the way we think it could.
Okay. All right. Very good. We've got option expiration on Thursday, don't we?
Correct. Yep. And then first notice day there on the 28th. So
on the 28th, anything that you are watching as far as, big volume and the market's making a move to a specific strike price? Do you see anything there?
A couple of things I would note over the last few weeks, on this last move lower as funds have kind of piled back into shorts, we saw them get pretty well covered up and then got right back to, short 200,000 or more. We've seen some chunks of bigger out of the money call buying going on. I think that's them probably protecting their position. I think they realize that, there's nothing that can immediately threaten this thing. Again, USDA is not coming out here and cutting any yields, for another 3 or 4 months at a minimum. And they know the old crop is out there. And so I think that's one thing. The other thing to consider here, though, is, just timing of all of it. I think it's, getting from these levels at this time with the volatility where it's been trading. I find a little bit of reluctance in wanting to be short a bunch of call option premium with a lot of time on it. I think anything, by third week, of August or something is probably okay, but that's something you could fight all the way up if we end up in a situation where that demand is still good. And then we get a bunch, keep in mind, China's been really slow to the punch on buying new crop beans. What if they just, all this comes together in the same 3 or 4 months? That's our best pricing opportunities, but unfortunately it could be the last for a while too.
Yeah. China's not just been slow on the punch
they haven't punched at all, have they? They haven't even taken their hand out of their damn pocket.
Gee. Dude.
I don't know what they're doing with that. I don't know.
I was just going to ask you, what are they doing? I talk about uncovered.
Yeah. Well, and that's the thing, and I'm starting to have that discussion more and more because the longer they wait, to me, it almost becomes a supportive factor because I really firmly believe they will come. I think they have to fill that hole between our harvest and South America's, even if the total volume at the end of next year is not what we want it to be. At some point, they still got to come. And we saw three flash sales here of late on the old crop soybeans. Let's hope that starts a trend here and they start bottom picking here as we get into midsummer. If they feel like the market is kind of done flushing, keep in mind, everyone's been looking for lower bean prices via stocks to usage, including myself. But at some point you just have to say, okay, that's possible, but it's not guaranteed that we can end up there. And the first way we can change the thinking, it would be is if we see a meaningful adjustment in these acres. So head on a swivel coming out of the 28th. After that, it could get boring for a little while again.
Okay. All right. Brazilian tax issues and what they're looking at on export taxes. I'm not exactly sure where this is going to go. What are your thoughts on this, Sam?
I'm trying not to put too much mental energy into it, honestly. I mean, and me on politics, I'm kind of that way with everything. So couple that with my cynicism on things. But at the end of the day, it is definitely something we have to watch. I don't think it's a short-term issue, though. We saw kind of a knee-jerk reaction when this was starting to be discussed.
Yeah.
But keep in mind, timing, the teeth of it is always going to be key. And one of the problems that we've seen in these South American producers, how many headlines have we seen where people are going bankrupt, they're going broke? They're having the same problems that American producers have when we overproduce because they're growing acreage so quickly, right? One of the problems that goes along with that is not having enough storage. That was part of their basis blowout last year. And so at the end of the day, even if you're getting taxed, even if your commodity is worth less, if you need money, you got to sell it. And so I think that, carries us into kind of a normalcy still moving forward. But I think it really impacts the desire of expansion moving forward, production expansion, how much more people are going to be willing to bite off and chew off. And honestly, if it has teeth to it, borrowing power is going to become a big thing. How long can you hold off until something could change or revert back? And so definitely something to watch, but fortunately, I don't know if you can put a whole lot of stock into it.
The farmers in Brazil politically carry a lot of power.
Yeah.
And anything that would make their product worth less in the future because of taxation it seems to me like they would just squash that before it's even got a chance, or before it could even get its first breath.
We thought the same thing about them, banning DJI drones too.
Well, yeah.
Here we are. You never know in politics anymore.
Yeah, that's right. That's exactly right. Okay, we talked some about old crop corn marketing. With me, what are we waiting for? Talk to me about new crop corn marketing. Where do you want people focused?
Well, it's almost the same answer there. Is if you've been waiting until this point to get started, it's kind of a tough nut to crack on where to get started. But at the end of the day, you might still need to get started, right? And so again, conversations we don't want to have. I know no one knows what their crop is, but as we go forward in time, you can narrow down what it is and what it isn't, right? And so I think that, and again, that ties back to, I think, the reluctancy that people are going to have in pricing, because when they start dialing in a 10%, 15% lower yield, if you got holes, as you're talking about, it just doesn't look good on paper. And you do have a bunch of new insurance policies. Some people set the base price last fall. All these different little products, I think, help keep grain off the market, especially if a bunch has been held over and puked. And we talk about that old crop supply, and you mentioned our elevator and some of those numbers we see. We're seeing about 5 to 6% more farmer ownership this time of year than we typically do. Yeah. So it just gives a little perspective. I know that we're just a small test sample, but it's probably a pretty good one. Yeah. And that keeps me thinking that we just don't have to run away to the races here, but it's going to be a longer term thing. And so you're going to have to figure out how to keep cheap, longer term ownership. And honestly, sometimes the cheapest way to do that is to have on-farm storage.
Okay. Any different view on bean marketings?
No, I self-admitted, I wish I had a few more beans marketed. I really thought we had a few more chances to kind of push up higher. At this point, I think you're just going to stay with a pretty slow market here. And I would say I was looking all spring for maybe a lower bean acreage number. The way things have turned out, I don't know if that's going to happen. But my initial, thought process on that was in lieu of cotton. I thought we would see more cotton, and so I still think that could be a factor, independent of everything we've seen this spring. If you start ratcheting down bean acreage, you got to look out, because just like corn, we're going to pencil in probably a 50 bushel yield there until proven otherwise.
Right. Yeah, and when you put that 50 bushel yield in there, it's still pretty easy to get to a 400 million bushel carry, isn't it?
Yeah, which isn't super positive, especially when you look at all the uncertainty moving forward with the biofuel market.
That's right. Man, great conversation, Sam. Good job, man. Thank you.
Hey, thanks for having me, guys. Stay cool, all right?
Yeah, you too. All right, that's Sam Hudson, Cornbelt Marketing. All right, Davis and I are going to pull some of the highlights from that conversation. We'll be right back to wrap up today's AgriTalk.
If the world is your oyster, we've got pearls of wisdom on AgriTalk.
Welcome back to AgriTalk, everybody. I heard somebody say the other day, no grit, no pearl. Makes a lot of sense to me. Chip, no grit, no pearl.
I get it.
Yeah.
You got to have a little irritation in that oyster.
Yeah. And I'm more than happy to be that irritation, daily. It's my job.
I see where we're going now. Okay.
But let me ask you this. Let's go into the hypothetical world, okay?
Yes.
Are you there? Are you here with me? Okay, there you are. Okay, I got you. What if I said to you, you know what? Why don't you take the day off tomorrow? I want you to travel somewhere you've never been before.
Yeah.
I'll cover the shows. Okay. I'll line up the guests. Well, actually, Joe lined up the guests, but I will talk to the guests. I will do the things, right?
Yeah.
Where do you think you would go? Just off the top of your head. Any idea?
So, I want to go down and
you can go
fish redfish and fish redfish in Louisiana.
Oh, redfish?
Right.
Okay. What would be your
That's not Stillwater, Oklahoma.
Well, it's not. No,
where I will
be
going.
All I know. Yeah.
But the thing is, you said someplace that I've never been before.
Oh,
I've actually been through Stillwater before.
I should have known you've been to Stillwater, Oklahoma. Yeah.
Yeah.
There aren't a whole lot of places. Chip's been everywhere, man. Like all over the place, bro.
Well, it's been a long career.
Yeah. You want to talk about what's up in Stillwater?
Stillwater, Trust in Beef Ranchers Tour. Big Apple Joe are making our way down there. We've got a tour going on at there in Stillwater. You kind of caught me off guard here just a little bit. I need to figure out exactly where we need to send the people for the. There we go.
We'll have the AgriTalk
2024 sustainable ranchers tour. Just go to trustinbeef.com, trustinbeef.com, and all the information is right there for you. And including, we're heading for Bertram Cattle in Stillwater, Oklahoma. Be there on Thursday to learn about what they got going on down there at Bertram Cattle.
Are we going to get Big Apple Joe in a nice pair of cowboy boots? Maybe a, 7 or 8 gallon hat kind of a thing? Does he dress for the occasions for these deals, Joe?
But
you got some boots?
Button down pearls?
Yeah, maybe. Again with the pearls.
Yeah.
I know Joe's got grit. He puts
full
up with
circle,
us all the time.
baby.
I'm really excited about tomorrow's show too. We're going to talk about the other stuff here in a second. But the markets are closed, right? Aren't they closed? Right. Yeah, that's what I thought.
Yeah.
So I'm going to talk about all kinds of stuff. We got a farmer forum. We got Dr. Scott Brown coming to talk about the ag economy. They just put out a new report. But then I've got the farmer forum with April Hemis and Michelle Jones.
Yes.
Tell me if this is a bad idea. I promise I will walk carefully, but there's a news story we didn't get to this morning that I wanted to run by them.
Okay.
A Texas federal judge temporarily blocked a USDA disaster relief program for giving preferential funding to women and minority farmers. The judge sided with a group of plaintiffs who claimed the program illegally discriminates against white male farmers. I'm really curious what they have to say about that.
Right.
I don't know. What do you think? Would I be stepping in it?
See, but no, I would definitely ask them. You feel free. Go for it.
Because these are
I think
two
educated,
you should. Smart, experienced, women in
right.
ag.
And what that means is it means that USDA thinks it is necessary for them to correct some past wrongs that were committed to minority farmers and to women, that they just didn't get fair treatment when they went into the county office.
Yep.
Okay? And I am sure that in some cases that is absolutely the truth. But the question is the reverse also true now?
Yeah.
Whereas preferential treatment for minority farmers and women is that I can't even think of the word. Is it racist, sexist against white farmers?
Is it equality? Is it
equality?
Yeah,
right.
Yeah. I'm gonna ask him that. And all kinds of other stuff too, of course. But I'm really looking forward to that. I got Bubba in the afternoon. I'm just gonna, how I do. I'm just gonna fire him up, just lob grenades at him and let him go. He'll be fine. It's gonna be a great day of radio tomorrow. Although we'll miss you. We'll miss you terribly, Chip.
Well, I will not miss you because I will be listening as we are as we are making our way down to Stillwater. I will definitely be listening.
A number that kept coming up, 10% lower yield risk throughout today's conversation, seemed more pervasive than ever before. We started the show talking about holes here and there in the corn crop that you have observed, that Aaron has observed. That 10% figure, for some reason that came up like 3-4 times today in the
10%
conversation.
10% is a lot.
Yes.
10% is a lot. It's like 17 to 20 bushel on average. So that's a lot. Now, can that happen when, according to Steve in Eastern Iowa, he says just replanted 35 acres of corn because of those 2 days of heavy winds that just shredded it?
Wow.
How do you like that?
We're
talk
not talking
about corn
just
drowning
drowned
out.
out
We talk
spots.
about it
Yeah.
hailing out. We talk
Right.
about it, just other issues.
Wow.
Steve had it come up, and then the wind tread it.
Yeah.
That is no good at all. So lots of different reasons. And Roger hit me with discrimination. Why couldn't I come up with that word? Is it discriminatory, these new policies? So, National Weather Service 6 to 10 day outlook. This is for June 24th through the 28th. Hot. It's got the above normal temperatures across most of the country. The very far PNW is the exception there. So we've got above normal temperatures expected in the Corn Belt, above normal precipitation also expected in the Corn Belt. The exception is the far western and far eastern production areas. We already highlighted it for you. Davis has got the microphone tomorrow. Scott Brown and the Farmer Forum with April and Michelle tomorrow morning here on AgriTalk.